It's Wednesday, May 25th, 2022. A lot to talk about. I want to get right into it. Before I do, please make sure to like this video. Make sure to subscribe to this channel. If you're already subscribed, make sure you hit the bell notification down below so that you are alerted with the newest videos. But without further ado, let's just jump right into things. I was just going over a lot of the news this morning, printed out some articles, want to share all of this with you. And the first article, card chaos, Visa and MasterCard outages, card systems back up and running after customers left unable to make payments. This happened Sunday. And it's interesting, I went out to lunch to a burger joint, Habit, and as soon as I stepped up to the counter, the woman said, we're not accepting any cards, no plastic, cash only. Our systems are down. And this is becoming more and more common when you go out now, that establishments, restaurants, retailers are having system failures. And somebody wrote me a couple days ago and asked me if I had heard about this, and I didn't. And I looked it up, and you know, lo and behold, here we are, Sunday, May 22nd. Thousands could not use cards on the East Coast, here in Los Angeles, Seattle, Phoenix, Houston, Atlanta, and thousands of people could not get into their online accounts. So it's interesting how we're seeing more and more of this, the ATMs shutting down, the bank closures, more problems with the plastic cards. And I bring this up because we are so reliant on technology, the system, the credit cards, the debit cards, and we're hearing more and more about grids going down, that the grid is going to be just overworked this summer. They're expecting a hot summer throughout the country, and that we're going to see grids melt down. And what do you do if you can't use your cards? This is why I say time after time, and I'm so repetitive, that don't keep all your money in the bank. Don't be solely reliant on plastic cards, because if a grid goes down, and no reason yet why the system went down, and we're probably never going to be told the truth why these systems are going down more and more, but be very, very cautious and make sure that you have some cash that you can get to in case of emergency. But regarding the credit card chaos, the real chaos, I believe, is going to be when these cards begin to cut credit limits, credit lines. And this is when we're going to see real credit card chaos. And we're seeing a type of credit card chaos right now taking place. And this is the reliancy and the dependency on credit cards now to pay bills, to pay for essentials. People now, many millions of people, are solely dependent on credit cards just to survive now. So a lot of chaos out there involving credit cards. The systems shutting down where you're unable to use one, and the dependency of millions of people now on these credit cards just to survive. So if the system goes down and you can't use this plastic, what does the average American do, especially the average consumer who's dependent on these cards to pay bills? Yeah, it got up and running, but what if the system went down for a couple days, a couple weeks? People can't go to the store, they can't afford to put gas in the car without these cards. Big problems. So make sure that you have some cash put away and that you can get to it. Article I was reading today on The Hedge, it's titled, "You Are Living in a Fantasyland," Peter Schiff. And there is a YouTube video that came out a couple months ago, and it was Peter Schiff debating Ross Gerber. And if you get a chance, look this up on YouTube. It's a great debate. And Ross Gerber has a investment fund, and this guy manages over $2 billion of other people's money. And you should watch this interview because it really teaches all of us that a lot of these people who are managing other people's money have no idea what is going on, and they have no idea what is about to happen. And in the debate, Peter tells Ross Gerber that he's living in Fantasyland. Gerber said that if the Fed raises rates 2%, that's going to squash inflation. He says inflation will be done. And just listening to him say something like that and thinking this guy's in charge of over $2 billion of other people's money, fascinating. It really is. But if you get a chance, check it out. It's a very, very good debate. But again, it's a real good example of some of these people at the very top, how blind they are to what's happening in this country, especially to the middle class, the average person, the poor, because they live at the very, very top of the pyramid. But the scary thing is, this guy could be managing your money. He's managing a lot of people's money, and $2.2 billion plus of other people's money. And he just seemed completely out of touch with reality. And Peter Schiff exploits that. And it's fascinating. So check it out. Again, another very, very good example that just because somebody shows up on the television, somebody's well-dressed, somebody's managing an investment fund, doesn't mean that they're smarter than you. Because watching this debate, I was shocked. And be careful who you're letting manage your money. You really need to learn about money, learn about this economy, reality, get out of the bubbles, out of Fantasyland, and you really have to be responsible for you. See, too many people allow other people to manage their money because they believe that they're smarter than they are, that they understand the economy better than they do. This guy, and this is no attack or assault on Ross Gerber. I'm sure he's a smart guy, but he is not seeing clearly what is happening to this economy. In fact, he said that this is the strongest economy in his lifetime. How in the world can this be the strongest economy in his lifetime? We're not making anything. We're not producing anything. We're the biggest debtor nation. And he tells Peter Schiff, come to LA, I'll show you how great things are, because the restaurants are busy. I mean, again, this guy is managing over $2 billion of other people's money, and he believes the economy is doing well because the restaurants in LA are packed. Yes, come to LA, see all the homeless people, see all the tents, see the infrastructure decaying. Unbelievable. CNBC, CBO, Congressional Budget Office, boosts U.S. GDP growth estimates, says inflation has topped and will cool to 2% by 2024. And I think some of this hit the markets today. Markets across the board up, nothing too big, but markets across the board did close up, and I'm sure that this helped a little bit. But how is inflation going to cool down? Somebody please answer me that. And how is GDP going to grow unless we begin to see more injections of QE and the government pumping in multi-billions and trillions of dollars into this economy, into the bank accounts of the U.S. consumer? How does the economy grow when we're not producing anything? All they can do is send people checks in order to get it to grow, and I don't see that happening. Bill Ackerman says a more aggressive Fed or market collapse are the only ways to stop inflation. Interesting. We're being told that inflation is peaking. I'm watching a lot of the financial shows today, and a lot of the guests were coming on saying that, I think we're at the peak. I think this is it. Inflation's peaking. It's only going to get better from here. We had a Fed minutes meeting today, and I was watching multiple shows, multiple guests interpreting this meeting in different ways. But is the market beginning to see the Fed folding on rate hikes? Is the Fed getting scared? Will the Fed reverse course? The Fed did confirm that it will be raising rates in June, 50 basis points. They said a couple more times, actually. Also, there was some talk that the Fed may take their foot off the accelerator with quantitative tightening. So all this very, very good for the markets today, but nobody's really sure. But billionaire hedge fund manager Bill Ackman said, raging inflation will only dissipate if the Federal Reserve acts more aggressively or the market sell-off turns into a full-blown collapse. There is no prospect for a material reduction in inflation unless the Fed aggressively raises rates or the stock market crashes, he said. If the Fed doesn't do its job, the market will do the Fed's job. Bill Ackman, who I think's been 100% correct, said raise rates to neutral right now. And yet we're getting these hints that the Fed is going to take their foot off the gas pedal, that we're going to get a couple more 50 basis point rate hikes. Many were saying that we would get 50 basis points on every Fed meeting this year. Now it's going to be maybe a couple. And the deceleration of quantitative tightening. So nobody really knows right now, but what Bill Ackman is saying, I think, is 100% correct. Look, if they want to just, raise rates 25 and 50 basis points, how is inflation going to go away? How are we peaking right now with inflation? And the one thing that I want to make clear is the Fed can print all they want, but they cannot print food. And this is going to be another problem. They cannot print gasoline. They cannot print diesel. They cannot fix the supply chain disruptions. All this is going to be big trouble. I don't see inflation going away. I'd love to know your thoughts. Comment down below. Let me know what you think. Has inflation peaked? Is this it? Are we going to begin to see an improvement in inflation going down next month and throughout the summer? Let me know what you think. Americans have lost $20 trillion since the start of 2022. This on the hedge. I don't think most people have any idea how bad things are about to get. It's going to be much worse than most believe. And it's going to get much worse because we're going to continue, I believe, to see surging inflation, surging interest rates. I just don't think the Fed can just turn around at this point. They know if they do, that's it. That's it. If the Fed can only print money to try and save this thing, if they have no backbone, if they do not get aggressive, the world is going to look at America, and they're going to look at the U.S. dollar as nothing more than a piece of paper. And this is what I believe they're doing right now. And this is why so many countries are dumping dollars, looking at alternative currencies, looking at gold and whatnot. But we're going to see another problem here, which most of you already know, and it's going to be the housing market. We saw a 16% plunge in new home sales. And as rates continue to rise, mortgage rates are going to rise, and it's going to be more unaffordable for people to buy a home. More people will not qualify to buy a home. And I think this is going to send housing prices way down. I think we're going to see a slowing housing market at some point develop into a crashing housing market. And remember, most Americans' wealth is in their home. This wealth is going to be wiped out. It is going to be decimated. And the wealth was really propped up, right? I mean, low rates, artificially low rates, all the FOMO, the trillions of dollars injected into the markets and into the economy, and all this really propped up the housing market. And people got a very, very false sense of security that they were wealthy or rich, that their home's going to go up 15, 20% a year, people using their homes as ATMs, borrowing tons of money out of their homes to live a lavish lifestyle, to buy cars and vacations and second and third homes. And we've really created a monster here, and this is going to be reined in. And people are going to find out that their homes are not worth what they once thought that they were worth, and that it was all propped up. Remember, housing didn't go up because people are making more money or the economy has been booming. It went up because the Fed propped it all up. And why in the world was the Fed buying and still buying mortgage-backed securities with a booming housing market, prompting the housing market to go up even more, creating a massive bubble? But people, they just look at their home price and they look at the equity and they feel great, but they don't understand that it's all on borrowed time, that it's all propped up, it's all fake. And they're going to pull the plug at some point. And watch how fast that equity evaporates. Wolfstreet.com, housing bubble getting ready to pop. Unsold inventory of new houses spikes by most ever to highest since 2008 with 9 months of supply. So please stop that, the housing market isn't going anywhere but up because we don't have inventory. We have a 9-month supply. It's going to be much more than that because we also have to factor in that companies are going to begin laying off lots of workers. And people, when they don't have a job and they have a mortgage payment, guess what? They have to sell their house. Now, in this article, it goes by region of unsold inventory and how high this unsold inventory has spiked in these regions. In the South, unsold inventory has spiked 53%. Midwest, unsold inventory has spiked 39%. In the West, 8.4%. In the Northeast, unsold inventory actually is in the negative 4%. Now, where did the bottom fall out? When you look at $300,000 to $400,000 homes, that is down 42%. $200,000 to $300,000 homes, it's down 71%. And in the $200,000 range, and under, that market is dead. $400,000 to $750,000, sales flat, but doing okay. But what we're seeing is the higher end market still doing well because of that, that top 1% flush with cash, the top of the pyramid, people that got the triple P money, people that got the breaks, people who were able to borrow money for next to nothing, that top 1%. That market's doing phenomenally well, even in retail, right? But you cannot maintain a housing market with just the wealthy or the 1%. Just cannot do it. The hedge, U.S. middle class is shutting down as spending by the rich remains robust. Just as we said, the Walmarts, the Targets, the dollar stores absolutely annihilated. But Nordstrom's just got a solid report and a strong earnings guidance. So people, still buying nice things at the high-end retailers. But when you look at the mid-level to lower-level retailers, they're getting crushed because the average person does not have discretionary money to just go out and spend now. And these are the same people relying on credit cards to shop for essentials. The hedge, U.S. durable good orders disappoint in April. Market's up today. The hedge, Michael Burry warns. Remember Michael Burry from The Big Short? He's warning yet again that the economy looks like a house of cards. And ladies and gentlemen, he is 100% right. And he will be right again, just like he was during the 2008 crisis. CNBC, Americans were worried about the economy even before inflation exploded, survey finds. People were getting nervous last year, according to this article. People should have been getting nervous much sooner than last year because the writing was on the wall. So to these people, why would, if you're nervous right now with this economy, why would you invest in these rigged markets? Why would you buy a house right now? Why would you buy a car right now? Why would you do anything other than just save a pile of cash, sit on the sidelines, buy some gold, and keep your powder dry and wait and see what happens? We don't really know, even at this point, how bad the damage is. These markets this year have been absolutely shattered. Trillions have been lost, and they are doing everything they can to just keep this thing on life support. Again, markets up today. You all know that the plunge protection team has been very, very busy this year. Just think, if the Fed didn't have the power that it did, where these markets would be right now, if they didn't have the plunge protection team, if they weren't buying treasuries and mortgage-backed securities and other actual stocks in these markets, This is why it's rigged, it's fake, it's manipulated. This isn't a booming economy. This is the worst economy in our lifetime. You could compare it to the Great Depression, yet markets go up. We're at, where are we at? About 32,000 on the Dow. These markets should be well below 30,000 right now. On the economic data that we have, the deficits, the debts, the inflation, the shortages, the disruptions, and yet today the market's up and we're above 32,000 on the Dow. Natural gas surge is above $9. It's the highest since 2008. Guess who this affects? It affects the middle class. It affects the poor. Gasoline, $4.59 a gallon. That's the national average for gasoline. I wish it was $4.59 a gallon here in California, but this again affecting the middle class, the poor. Is it affecting the people at the very top? No, they don't even pump their own gas, but it's affecting you and I. And I want to close with this last article just to break things down. How inflation changed the price of a hamburger. And when you look at just the simplicity of this breakdown, you just think about everything, the cost of everything continuing to go up. But just a simple hamburger, the roll, that hamburger bun, is up 10.1% this year compared to last year. The lettuce is up 12.7% compared to last year. The tomato is up 0.4% from last year. The bacon is up 17.7% from last year. The ground beef up 14.8%. The ketchup, the mustard is up 9% from last year. Plus labor is costing more. Energy to cook that burger costing more. The rent or the lease of that building costing more. So you see where this is all going. Just so a simple hamburger has skyrocketed. And just going back to where I began the video, when I was at the Habit the other day for lunch, when I first went to Habit about 4 or 5 years ago, you could get a #2, which is double cheeseburger, fries, and a drink for under $7. Now that same meal is $12, okay? Personally, I don't think it was as good. The service wasn't as good. Yet I'm paying almost double of what I was about 4 years ago for the same meal. But again, the price of everything is going up. But they're telling us today, don't worry, prices in a month or two are all coming down. Inflation has peaked. This summer is going to be fine. GDP is going to grow. Everything's going to be okay. So look, go out, run up the credit cards, go buy a house, go buy a car, go buy something with money you don't have, but don't worry about your job because you probably won't have that by the end of summer. So this is the mentality, again, that they are just suckering people into to continue buying things with money they don't have, wanting you to buy into these markets. They need you to keep this machine going. As I leave you today, my advice is get out of the system the best that you can. Don't keep all your money in the bank. Don't keep all of your money in paper. And don't rely on the system being there for you. If you believe everything is going to be okay, God bless you. I hope that you're right. Keep investing in these markets. Buy the dip. If you trust the financial institutions, keep all your money in the banks. Do what you feel you need to do. But me personally, this is just me. I'm just a guy with a camera and a microphone making a video today. There's no way I trust with what's going on. Watching these markets, being down 517 points yesterday and turning around and coming back, and just more of the same, magic tricks taking place. You see the massive manipulation. You see the rigging, and I think that you better be very, very worried about where all this is going. When they pull the plug, your money on the computer screens, in the banks, is going to be in jeopardy, in big trouble. Be your own central bank. Be reliant on you the best that you can. Make sure you have food. Make sure you have water. And make sure, most of all, you're walking close to God. God bless all of you. Look forward to speaking with all of you soon. Have a great week.